If you are thinking about expanding your startup from India to Singapore, remember these top 3 things you need to do to expand your footprint effectively. The first thing you need to do is incorporate your entity in Singapore. The most common business structure for startups is a private limited company. This structure offers a range of benefits, including limited liability and potential tax incentives. The incorporation process is overseen by the Accounting and Corporate Regulatory Authority. Here's how it works. You'll start by ensuring that your desired company name is unique and complies with ACRA's guidelines. Then you'll need to prepare necessary documents like your company's constitution, details of directors and shareholders, and a registered office address in Singapore. For foreign founders, there's a requirement to appoint at least one local director who will have no decision-making powers over the company. Engaging a corporate service provider can help you with the local compliance aspects and streamline the incorporation process, making it a lot easier to establish your presence in Singapore. The next major hurdle is opening a corporate bank account. You'll quickly discover that banks in Singapore have strict due diligence procedures, especially for foreign-owned entities. This is largely to comply with regulations, and as a result, opening a bank account might not be as straightforward as you expect. If traditional banks prove challenging, consider exploring digital banks. Several digital banks in Singapore offer business accounts that cater specifically to startups and small businesses, with a simplified onboarding process and lower fees. The third key point is understanding the tax regime and the incentives available to startups. Singapore is known for its pro-business tax policies. The corporate tax rate is 17%, but there are specific exemptions for new companies that can significantly reduce your tax burden. Under the tax exemption scheme for new startup companies, qualifying startups can benefit from a 75% exemption on the first $100,000 of normal chargeable income and a 50% exemption on the next $100,000 for the first 3 consecutive years of assessment. This means that startups can potentially save a lot during their initial years when cash flow is often tight. In addition to the tax exemptions, Singapore offers several startup support initiatives. The Startup SG program, for example, provides funding, mentorship, and other resources to nurture startups in their growth journey. A lot more details in the description.